Bitcoin just reached 120,000, and if you're thinking of buying it today, think again, because we're going to show you 10 ASX stocks that will beat Bitcoin by the end of this year. Get ready, because this show has the potential to supercharge your portfolio. If you want to trade with more certainty than over 95% of traders, then you've come to the right place. Welcome to Wealth Within's Australian stock market show. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. I'm Philip Tortevsky, and joining me is Wealth Within professional trader Janine Cox, alongside Wealth Within graduate and Blueberry Markets Head of Premium Sales, Zoran Kresovic. Good evening.
Good evening. How are you?
Good evening.
I'm great. Got it all out. How are you, Zoran?
Very good, thank you.
Fantastic. We've got a great show today. We're going to cover off controversial Bitcoin. So let's get straight into it. Bitcoin, as you're probably aware, smashed through 120,000 very recently. Now the media are going wild about it, where it's headed next. But is this really the best opportunity out there today? I want to start with you, Janine, before we get on that chart of Bitcoin, because the media is going to be pumping it up right now. It's at all-time highs. But when you do a bit of research, it's only up about 20% this year.
I know, amazing, isn't it? However, when stocks get to those new all-time highs, they could keep going, but it's looking pretty steep right now. So, you know, often when these sort of reports come out, it's not far from the top.
Yeah, and I mean, crypto has a big conference coming this week. 3 regulatory decisions out there in the US that can change the whole face of crypto. So you see all-time highs, price booming, and then news come later on. Not going to say anything. We'll see what happens, but let's get to that chart and have a look in terms of where Bitcoin's going.
All right, then, if we just have a look at the monthly chart for the moment, you can see what Phil was talking about, this new all-time high that's been created. But what I really want to draw your attention to is how far it's actually run from this low here. And that's really important, because Bitcoin's risen around 60% from that prior low. Now, often when you see big pullbacks like that and then a breakout through to a new all-time high, there'll be a retest of support. Now, $100, $110, somewhere between there is really important for Bitcoin. So it may be that it's going to break out a bit and then come back and test that. If we look at other pullbacks that it's had, we can see that it was stronger when it only pulled back 33%. If you know trading, you'll know that often when these pullbacks are less, like in this sort of order, then you could get a significant run out of a stock that's pulled back like that. And this looks more like a consolidation than an actual decline, whereas this is more of a decline. So often you see these sort of things not far from tops, could be 6 to 12 months out from a significant high. Now, looking at the short term, we can see that there is an opportunity here for the stock to run for a few more weeks, and things will run on news like that. So if we're looking at this rise, could it go up to 135? I'd say, yep, it's probably reasonable to think that it's got a little bit further to go before it does peak out. But somewhere around there, or 135, at max 140, I would say we're going to see another peak for it.
Yeah, fantastic. So what I guess you're saying is the runs are starting to slow down on the way up, which is a bit more caution than not. Yeah,
well, those sort of really sharp accelerations, like what we're seeing on the chart, if we just go back to that chart there, you can see really strong rises there. That's sort of when that starts to being repeated, then you'll start to see often a swing in the other direction.
Fantastic. All right. Well, this is the exciting part. Stocks that can outperform Bitcoin this year. So let's go, Zoran. What do you got, mate?
So we've got Raise Invest Limited, RZA.
One actually.
Oh, is it?
Yeah.
You can go, I mean...
You sure? Do you want to fight me over it?
I'm not going to fight you over it, but I thought you already had the guys, so maybe it's my turn to actually talk a little bit as well.
Sorry.
I just want you to catch a bit of a breath of fresh air.
Well, how about one of you get into it, because we need to look at this
How
stock.
about you have Telstra, seeing you really like Telstra?
That's okay.
All right.
Ladies first.
You're such a gentleman. Thank you. All right, now this little stock I found was quite interesting, Raise Invest. It's in the crypto space, and you know, can you compare this to Bitcoin? If you think about what Bitcoin was like after it came off some long-term lows, it sort of coasted along for a while, had a bit of a run, consolidated again before it had another rise. Now, it is below my all-important $1 mark. However, if this is the sort of stock that you're into because you like these short-term, volatile, higher risk trades, and this would be one of those stocks. And just look at on the weekly chart how it's consolidating. Now, the telltale signs of when this might fail is that low there. If it takes off below that low really strongly, then I'd be watching to see if it's going to come back and test that prior low in April 2025. If we see a rise above this high, it's as simple as that. It's like a seesaw. Then the stock's more likely to break through that dollar mark that is really important. We can see there's prior resistance here on the left-hand side in September 2019, up around $1.17. So that'll be important for the stock this crypto going forward. But the sky's the limit on this. I mean, it could head all the way back to these highs, up around $2 if it really gets going.
Fantastic. All right, next one, Zoran.
Next one, we're going into a slightly different field. We've got Telstra Group Limited, TLS. Monthly chart is looking fantastic at the moment, but on weekly chart, I would like to actually see a bit of a pullback. But look, on monthly chart, I think the stock is actually done quite well in terms of obviously strong breakout out of that sideways range and that key $4.40 resistance level. And now what I would ideally like to see is actually for the price to actually bounce back, because from the lows back in May 2024 all the way up to now, we've actually seen quite a significant upside run. And whilst I do love seeing this, and I think it's fantastic, like to obviously jump on the bandwagon and actually grab all the upside, but 45% upside, I would like to see probably 15 to 20% pullback here, and then hopefully the stock can actually kind of consolidate and continue going upwards, because I don't see any other major levels of resistance on this stock up until probably $5 level mark. So if you ask me, I think it's probably a little bit too late to jump in right now. You'd like to see a bit of consolidation, and then hopefully once it does consolidate, it can actually gain a lot more momentum and it can actually continue heading higher.
Yeah, but I want to stick on this because it's a perfect representation of you hear Bitcoin, you hear crypto, crazy returns. It's where all the returns are in the market. I just today went and researched the top 100 ASX stocks. The top 10 have actually performed better than crypto or than Bitcoin, this year alone. We're talking about slow, boring ASX, right? You look at Telstra. Telstra is a stock that is safe, pays a good yield, not too volatile, and the return this year has been more than Bitcoin.
Yeah. Now, did you do a podcast on that, or was that on one of your Monday reports?
It was on a TikTok actually, so we're on TikTok as well if you didn't know. Check us out on Wealth Within. But the point is that really the growth can come from the ASX just as much as crypto and Bitcoin, and a safer spot. And I know we've spoken about this time and time again, but right now there are so many opportunities. And when you're looking at this one, both Bitcoin and Telstra have both gone up quite a bit. So you've got to ask yourself the question now, which one, when you're dealing with volatility, is the safer play, right? Because they're both potentially at some point going to pull back.
I think you're making a really good point there. And from my perspective, I'd be probably looking at diversifying. That's probably an ultimate goal, or what you're actually trying to basically get across to students or traders. Because you look at Telstra, obviously it's a well-respected stock within the industry on ASX. It provides a yield as well, income yield. So whether you're looking for growth or income, and obviously in a regulated market as well. Whilst obviously with cryptos it's a little bit different, but if you're doing, actually last week when I was in Sydney, I was talking to one of the guys that had a partnerships that works for CoinStash, and he worked in investment banking for 10-15 years, and I was telling him what is the transition like to actually go from somewhere like margin lending, managed funds, equities, to actually go something in cryptos. And he said it's a open world of opportunity, but it is at the end of the day unregulated market still, and he said until that regulation comes into play, there is an elevated risk with that. And that's why what he's saying is actually the actual diversification is the most important component here, because he is going and talking to the financial planners, hedge funds, fund managers, to try to actually include some of those cryptos within the portfolio. And a lot of these traditional players or investors, or I could say banks and hedge funds, are actually quite reluctant and resilient to this at the moment. But my point when discussing with him is, even if you go 5 to 10% and you limit your risk, if it does actually go 10, 20x fold, it's going to outperform and you'll still be able to actually make good returns. And on the other hand, you can actually put the rest of your funds in smart money, like, Telstra's, BHP's, Rio's, and essentially get the rate of return as well. So I think as an investor, you have to be savvy. You have to understand what you're getting into, and essentially go from there.
Yeah, good point. All right, next stock.
All right. WiseTech. Now, WiseTech Global is one that's always going to be on my list. And at the moment, it's setting up. We've just got to wait for a bit of a pullback on WiseTech. But it's important to have a look at the history and see how this stock is performing, because obviously it has some pretty big drawdowns when it pulls back. And it may, stumble here temporarily at the moment, is what I'm hoping it will do, actually, which, sort of counter to what you ideally think. But if a stock does pull back a bit and gives us a decent pullback, not something necessarily just 1 month, maybe a couple of months down would be ideal before it then takes off again, we can potentially see that there's a whole range here to the all-time high. So it's got 20% to the all-time high. But then if it gets through that all-time high, and we won't know that for some months as to how far it's going to go. It depends on this pullback that we're waiting for that will tell us more about that picture. But, if we see the same sort of thing happening here, we get a decent pullback, we can see that gains off those highs of another 30, 40% could happen once the stock gets running again. And remember, everything is uncertain at the moment with everything that's going on with the wars, Trump tariffs. At some point, there's going to be a change in the whole cycle of things, and we will get that boom into the end of the current, last few years of the cycle that we're expecting into the high. So when that happens, these tech stocks are really going to ramp up and take off again. You're going to see that locally, you're going to see that in other countries as well, not just on our market, but we're going to see stocks like this really take off, and there'll be no rhyme or reason for it. The logic will go out the window. The earnings won't matter. It'll be like everybody's jumping on the bandwagon. So could that fuel Bitcoin a bit more? I think it will, but I just think some of these other stocks could go further. Yeah,
absolutely. Great point. All right, next stock, Zoran.
Next stock is Genesis Energy Limited. I prefer this actually on weekly chart, even though I should be starting from the bigger picture, from monthly. But, I like the consolidation aspect, and obviously the stock is creeping up and around the $2.15 mark. So that's on weekly chart. However, I can't ignore the bigger picture as well, and just this big downtrend that's actually been happening from an all-time high in 2021. I mean, looking at the time horizon back from 2021 up until now, I can see this is a long period in time. The stock has actually been trending downwards, and unless I can actually see something.
Change your mind now, mate?
In terms of what?
Long-term opportunity once you draw that line?
A turning point.
Potentially, yes, but my point, if we can go back to the stock, is I need to see a breakout on the weekly chart and quite significant breakout. If I can see that levels breaking around $2.15 to $2.30, I think if the stock can actually reach $2.30, then it's going to probably give me a little bit more confidence to jump back in. But I do understand what you're saying. It has been going down. It's breaking a long-term downtrend, but at the end of the day, it's only consolidating sideways, and I need to see a clear breakout for it to give me more confidence.
Yeah, because that's really what we're talking about, the formula, right, Janine? We're talking about what could outperform this really popular, industry at the moment in Bitcoin. And I think the formula is quite simple. Bitcoin's trading at all-time highs. You have a stock like Genesis Energy trading nowhere near that. So applicable or interesting to the deep value type, institutional approach as well, also trading. But then picking a few sectors that on the ASX are very volatile, that can really supercharge that return, right?
Yeah, and I mean, looking at this particular stock that we've got on the screen now, the thing that's interesting to me is that it seems to want to hang around this $2.50 level. It seems to be that it's spent a lot of time there. Also, what a lot of people won't realise if they haven't studied with us is this stock is trading at a significant support level. This is one of the strongest levels for this stock in its history. And it's really potential for turning points, right? So if that's the turning point, and there's a high probability it's already gone through the momentum line or trend line, and then I can see that there was this important consolidation around this 250, 260 level, then we've just got to have a look at what that's worth once it gets going. And we can see there already in the short term, there's probably 17, and to the top side of that 25%. Now, if this stock gets to these sort of levels, that is going to indicate that it's got a much higher probability of doing the rest of the run and heading back up here. So, it could end up being a stock that was trading at around $2 and end up going to $3.40. But its first hurdle is it's got to get up to here around 250 to 270.
And it looks like it's doing all the
right things in terms of the setup.
It is, and weekly chart, I like the fact that it's obviously started this sideways consolidation, and it's actually been doing it for a long period of time. So since around May 2024. So that's given us probably approximately 12 months of consolidation sideways, and the volumes have actually picked up somewhat when the price dropped as well. So I do agree with you, but I also want to make sure that if I was to enter this stock, given the amount of time that it's actually gone to the downside, that I can get a confirmation that we actually at the market bottom on the stock, as opposed to counter trend move, which is going to prevail and then continue heading.
Yeah, so you want to see that volume pick up.
Correct.
On that, yeah.
That's what makes the difference, isn't it? When you're talking about, we see it all the time when our students or traders come. It's the high probability trade, what you're talking about, not just getting in because it's looking like it's reversing. Giving up a little bit more of that opportunity to then really confirm, to get that consistency in your trading.
We're talking about trades that haven't been sort of talked widely about necessarily. So there are stocks out there that people try to put out in the media, but they may have already run. And so that's why they want you to have a look at them. But what we're trying to do is identify ones that haven't done that yet. Yeah,
well, that's where the best opportunity comes. Did you want to add something real quickly?
I just want to say it's like having a checklist of 10 rules, let's say, in your playbook, and you're basically ticking each box to give you, and each rule is 10%. So you want to stack up the odds in your favor and have at least 7 to 8 boxes ticked out of 10 to make sure when you enter the stock you have the highest probability, and that's what it is. So you're basically checking different things, volumes, trend lines, and everything else that's been taught in the course. So yeah, it's all about that consistency. And if you do want that consistency, go and check out this book, How to Beat the Managed Funds by 20%. It's Dale's book. It's free. It is in the link below this video. You just have to pay the shipping. But if you do want to take your trading to the next level, please go and visit our website and do one of the courses, the Diploma of Share Trading and Investment. If you really want to get that confirmation, to get that consistency and get those high probability trades, just like the guys and girls are doing here, that's where it's at. So next, I believe we've got one more, right?
Yep.
We got Zip.
All right, you can take Zip.
I've had a lot of coffee today, so I can talk. Thanks, Janine.
Oh,
yeah, you have? Okay. Thank you. I appreciate it. That's very kind of you.
Well, what do you think of Zip?
Well, following it through, I think we mentioned that on the show a couple of weeks ago as well. I think monthly chart is looking really good. I'll just actually mark some key levels. This is probably not it, but it's slightly above. $3.50 seems to be quite a lot of resistance at the moment. And I would also like to mark the support level around $2 mark. So I think this is like that mid-range levels where the stock is actually consolidating and trading for quite a long period of time now, since July 2024. So it's approximately a year. I genuinely believe that if you can break this high in December 2024 at some point, then I think there's actually a lot of upside on this stock. Or at least in the short term, we should be able to see, let me just use the right tool, apologize. So we should be able to see the stock actually towards around $5.30. However, having a look at it on weekly chart, and I think we mentioned a few weeks ago, there is actually on daily chart, I feel there is actually quite a bit of a gap that needs to be filled, and that's around $2.30. I'm not quite sure why it's not reflecting here on this chart, but there is definitely a gap. So I would like to see the stock to actually come back and consolidate around $2, $2.20. If you can do that, then if you got the right rules, once it does start reversing, we could see some good upside on this.
Let me just ask you one quick question on
Sure.
this one, because it is quite a popular stock. It's, you know, had huge runs, and that range you mentioned is quite a big range. I mean, some traders would look at that range and think, oh, to me, that's an opportunity to trade short-term up and down. But when you're talking about Zip, a lot of it was from an investment perspective back in 2020, riding those big runs. So has the stock today done enough to warrant that, hey, this is in a long-term uptrend now, and these pullbacks will happen, ebb and flow, but really it's done enough and turned the corner to say this is likely to go up over the next couple of years?
It's a really good question. I think it has. If you have a look at the stock fundamentally, I think it's actually changed the way they're doing things quite a lot. If you have a look at the profitability of the company over the last a couple of years as well, it's actually turned around and they're starting to be profitable business. I understand there is actually concerns in terms of the number of shares issued. I think actually they've got quite a large portion of the issued shares on the market, which can dilute the share price in overall. But all in all, the company's taken a twist. They actually cut out a lot of markets globally which haven't been actually performing quite well. So they actually cut that, and they're starting to focus and putting a lot of emphasis on the markets that are actually doing quite well. So I think it's a good strategic move from the business on the fundamental basis. And as I mentioned previously, actually, I think they're about to clear all their bad debts. Profitability is going up. So obviously it's starting to interest the bigger part of the town, and could provide some good opportunities.
Yeah, all right, fantastic. Now, later on in the show, we're going to dive into some more Bitcoin beating stocks, so stay tuned for that. But now it is time for our trending topic this week. Janine.
Big one. Is it time to ditch your retail stocks? Clothing retail Country Road, owned by Woolworths, is the latest retailer to fall on hard times, and many Country Road stores will close. Several iconic Australian brands have collapsed in the past 12 months, shedding thousands of jobs. Why, and what's in store for Woolworths' share price? This is a sign of the times. In 2020, around 12% of Australian shoppers used online shopping. In 2024, 64% of Australians shop online. Now, currently Woolworths, Coles, Apple, and it's no surprise Amazon's in there, Shine are the biggest benefactors. Amazon was forecast significant growth while more physical retailers could fail. So which stores are most at risk, particularly in a downturn? Now, the ones you see in red on the chart are said to be most at risk. Adairs, Kogan, to name a few, whereas Beacon Lighting, Wesfarmers, who owns Kmart, then we've got Breville, Metcash, Woolworths and Coles are the more defensive ones. So what have we got next, Phil?
Yeah, we're going to go take a look at Woolies. I think that's a good one to look at. But when we're talking about that list, it's quite interesting because you've got Lovisa, you've got Adairs, you've got Premier Investments. Those share prices aren't down. They're running strong. So this is...
Well, look, for the next couple of years where we're expecting a bull market, that's fine. But what happens after that?
That's right.
That's the big question, isn't it?
Yes.
So will we see more of those retailers go out the back door?
I mean, with technology coming through more and more, I think it is a challenge.
Well, Amazon's making a fortune out of us. I mean, I think to some extent Australians are just too short-term focused. We continue to want to save, $1 here or there instead of buying or shopping in our own backyard and making our profitable companies even more profitable so that they pay us more super.
Very good point. All right, well, let's get into Woolies and have a quick look there.
All right, now on the left-hand side of the chart there, I've got the monthly chart of Woolworths. We can see a decent pullback. On the right-hand side of the chart, you can see the weekly chart and a slight slowdown in the fall there in the short term, which looks really nice in my view. So I'm thinking that, while the temporary news about the Country Road stores may, cause a bit of volatility to the downside, I think that Woolies is well positioned to take advantage of the next boom period that we're going to see on our market. And I mean, it's been very defensive, but it's been out of favour. Coles has been the big one that's shot ahead, and while Woolies has been lacklustre, but we know at times that one will outpace the other. So it's a question of when are we going to see a change, and see Woolies take off. Well, I like the angle of this trend down. I think that it's so neat and we're seeing the stock come back to test prior significant highs. So at the moment, we've got some resistance there. It's just met it recently with that high. It's found support from prior highs, even going all the way back to the GFC. It's come right back to that point there. You can see on the far left-hand side of the chart, this is where it's finding support. But two lows there, a good sign that this could be the bottom that's coming in now. It's slowed down into the low. And this is a classic sign of what we generally see when a stock makes a low, moves up, comes back to test it. Now we just need to see proof that it's going to continue to rise. But Woolworths shares, I think, will be, if you're holding them now, I probably wouldn't decide to sell them. If they take off and head below this low in March 2025, then we're going to see some much more significant lows in Woolworths shares, which could be below $22 or $24. But if we see this slow down, a bit of a consolidation, it starts to move up, then, this stock could head back up to $40.
Yeah, a lot of opportunity. All right, time now to get back into our topic for the night and reveal some more Bitcoin beating stocks. All right, Zoran, big task, mate. What's going to be Bitcoin this year?
So we've got APA Group, well-known stock. I'm just going to expand on the monthly basis. It looks like we actually got major low in January 2025. It looks to be broken. It looks like the momentum line or the trend line has also been broken as well to the downside, which could provide quite a bit of upside as well. And from the bottom in February 2025 up until most recent high, we've actually seen quite a stagnate or quite a bullish run. So the stock has gone up around 35%. So look, in the short term, I think this is actually a good point. I would ideally like to see some of these levels hold. So in particular, $8 level would actually be good if you can hold around here and consolidate. And it looks like actually the stock is doing exactly that. So that's really positive start. On weekly chart, if I was to actually go on weekly chart, then I would like this level here to be broken at $8.73. It's actually quite significant high. And break around that level would most likely give me an entry personally, if I was to actually trade this, and then hopefully we can, break the $8.80 to $9 level mark and head higher. But look, the stock obviously it was in a downtrend for quite a significant amount of time. It looks like it's got a pinned bottom. It's reversed quite well. It's consolidated somewhat, so retraced, which is also a good positive sign. We just needed to actually gain some momentum and break around above the $8.70 mark, and then hopefully there's going to be a good entry on it.
Yeah, some real strategic points, and I mean, it even had volumes really starting to pick up, so that's another tick for this one. That's one to watch. All right, Janine, next stock.
All right, we've got Yan Coal. Now, some of the coal stocks are actually looking good at the moment. And look, it's pulled back. We know that it's had that big decline into the low here in April 2025 with the Trump tariffs. But, there's this setup here at the moment. This consolidation has been going on now since 2022, May 2022 or thereabouts. That's a long time for a resources type stock to experience that sort of pullback. So I'd just say that once it gets back through these highs, there's plenty of upside here. We're talking about $12, $13. This stock could double. It could be one of the ones that does if it manages to get through there. At this point, though, there's no confirmation of that. While the short-term trend's looking really nice, this big acceleration up, we need to see a bit of a pullback and a retest, and that's such an important thing. We've seen it so many times on the stock before it's accelerated off really strongly after this pullback, and I think it won't be too far away. I mean, if you just look at the angle of this trend coming down here, we can see that it's actually met a bit of resistance there, pulled back for 1 week, gone through, and it's really stalled at the moment. So I'd just like to see it spend a bit more time around $6 before it then starts heading up again. But to me, this looks really nice.
I mean, how much importance are you placing on, when you look at stocks like this, obviously a lot more volatile, but then you get those flush out moves, if you will, or those really sharp down moves, but the stock doesn't go on with it, right? And it's happened 2 or 3 times on Yancoal. Does that give you that more confidence that, hey, you know what, that probably is a low we're looking at, considering where we've come from? And then you layer on top, how many people, you know, you speak to students all the time, you see they apply support and resistance and they think, oh, just because the stock's hitting a wall at the top, it must mean that, hey, it's going to dump. But that just might mean the exact opposite, that it's getting ready to bust on through.
Yes.
So are you...
the short sellers come in, they get exhausted. That's a real test of their determination to push the stock price down.
Yeah.
And then that rebound is the telling thing, which is what you're saying, which is a good rebound we've seen.
Yeah. So interesting. All right. I tend to like that one. What's next?
Bob Metals Limited. Another interesting stock, definitely, if we go all the way back since...
All right, we're in the specky corner now. Let's go.
2006 highs, obviously the stock has been absolutely battered and smashed. Now, it did have actually a solid run from February 2020 up until, when was this? Let's have a look, in August 2020. So it must have been some significant news and stuff. But all in all, just having a look, I have to say, on monthly chart, it doesn't look too bad, I have to say, because it looks like the trend line is once again has been actually broken. And what we're finding is actually with a lot of stocks that we picked today, the trend line aspect has been broken and the stocks are trying to reverse and find the bottom. But look, it's looking positive, but my main concern with stock like this is, you know, breaking it down into nitty-gritty, like weekly and daily charts. And if you have a look at the weekly or daily charts, it clearly demonstrates the stock is actually very, very illiquid. So if we go back to the weekly chart, we can see the opens and the closes. We can see a lot of gapping as well. And look, you can trade this. I'm not saying you can't, but you know, if you're entering the price, it's highly likely that you probably won't get the price that you're looking for because you're going to get some sort of slippage. And then obviously the concern is as well when you're exiting stock like this as well, because there is probably a level that you won't be able to get the price that you're actually asking for when you're actually trying to sell. So that's the main concern here. And for newbie traders, I know it's vice versa. A lot of newbie traders and inexperienced people tend to actually trade this stock, you know, because everyone wants to find the Cinderella story, one shot, big trade. But this is probably for more experienced traders.
Let's play devil's advocate and say that someone is looking to get in this space.
Yeah.
And they think, you know what, I really like it. But you've raised a very important point about the daily and the weekly probably not being the best thing to do, given that, you know, there's serious noise and illiquidity there. Is it just as simple as going up one time frame and saying, I'm going to trade this on the monthly, forget about the rest, and take a big element of that risk? Or is it still, regardless if you go to that monthly, still a risky proposition?
I still think it's a risky proposition. It's a really good question that you asked, because if I have a look at the chart on the stock, it looks appealing. It certainly does, especially on weekly chart. I mean, 20 cents there looks like a great entry point, because it appears you actually find the long-term bottom here in October 2023. It shot up, it came down slowly, consolidated sideways, I've seen it many times over the years where stocks like this actually exploit and they provide a whole heap of upside. And look, I'm not saying you shouldn't trade it, but what I'm saying is your capital allocation should be within your means or within the risk that you're willing to take. And I would never put all my eggs in one basket in a stock like this. That's the point that I'm trying to say.
This thing could double though, couldn't it? I mean, just looking at it briefly, I mean, I know it's a 20-cent stock and I shouldn't be saying this because, you know, putting my foot in my mouth here, which I often do.
But you can...
But look, you know, 40 cents, it's reasonable to think that it could go to 40 cents. And this is sort of the classic consolidation. It's changed personality, which is what, you know, Zoran was obviously identifying that there have been some changes on the chart. Those two bottoms there that show one's higher than the other, that's a good sign. The consolidation that you'd expect to see, it's moved out through the angle of that trend. Ticking those boxes that Zoran talked about before, it's doing all of that. So, yeah, like you say, it just depends on how much do you put into it and where you're going to set the stop loss. And Phil, you raised the question before about, you know, could you do this on the monthly chart? I mean, when it comes to trading, we teach you that you can do anything. It's just a question of, what your risk is and always be thinking about that. But looking at that low there, the challenge is it's 43% to the low. So really, while you're saying trade it on the monthly, it's setting your stop loss is more likely to be based on weekly though, isn't it?
Oh, look, I've got no issue to widen it out given the volatility. If it was me, I'd probably stick to the bigger time frame on these kinds of charts. But I mean, look,
Give it more time.
a lot of food for thought. There you go. Different views, all coming to the same conclusion, I believe. Anyway, so let's get to the next stock.
All right, Sonic. Now, Sonic Healthcare, some of the healthcare stocks, there are opportunities in biotech, pharma, bigger healthcare stocks as well. We've been disappointed with CSL. Obviously, over time, it's always been the big one that the go-to stock, if you like. But at the moment, Sonic's holding in there. It's hanging in there, if you like. And it could bounce out of this and start to move up very soon. We've seen a bit of a pullback more recently. I'm just going to expand that weekly chart. Bit of a consolidation. It pulled back here in June 2025. It really needs to get going back up to these highs reasonably soon to around $29. Obviously, you've got to be thinking about coming into a volatile period in reporting season that can have an effect as well. But at the moment, I'm thinking it's looking like it's made a recovery, that this could be the low. We've got a higher low here. I think it's starting to look more interesting. Volume's picked up a bit, which is great to see. It's slowed down the last couple of weeks, but we just need to see a push up and then on nice volume, and that would be looking good.
Yeah, and I mean, but isn't that totally to be expected? You're talking about a stock that's come off a 40-50% correction at a major low, significant reversals. That isn't always the cleanest price action.
Exactly. It's sometimes a challenge. That's where you've just got to work out, how do you work out what are the strongest levels? I mean, we talk about all the time there are strong natural levels, and this is where using the analysis is so important and bringing all of what you know together to work out where those strongest levels are. Because as we know, we can put our different levels on there, and it's not always the natural levels are the ones that are going to turn it around.
Yeah, and expect if you're going to be playing around that space where there's more chance of a significant reversal, then you're going to see some interesting price action. It's not going to be as clean as a stock within trends.
I mean, that's one of the things that some of our students have found really interesting is learning that there was more to it than just drawing a horizontal line, a lot more.
Oh,
it really opens up their eyes, and it gives them the sense of confidence in knowing that if a stock takes off, well, it's more likely to get to this particular level, and is it $5 or $4? What's going to be more important? And then being able to make that judgment. Yeah. And that determines whether or not they can trade it. We see it all the time. People say, we can watch what you do and we know what you do, but there's so much that goes underneath how simple it looks. But anyway, if you do want to get really educated the right way, go on that website and check out the courses. But we do have one more stock, I believe. Oh, so could I just say before we go, sorry, Zoran, but potential upside, possibly around these highs here, 36.70.
Oh, cool.
Once it gets going.
That's more a longer term view though, right? Short term, you want to see around $29, yeah?
Short term, you want it to get up to $29 and just prove that it's going to get going again. Absolutely.
Last stock.
NZME Limited, NZM. So I actually really like this stock. So Phil, kudos to you for actually picking it.
This is it's a media company, I believe.
Yeah. So good choice. Really good choice, I would say. The stock has actually found quite a bit of bottom around 73 cents. It seems to provide quite a bit of support throughout the history of time. I'll just actually push this slightly higher up, so that's a good base. After getting sold off from an all-time high around 165, it's actually come back. I don't want to do another trend line or momentum line because it's very evident that it's broken through and it's obviously started short to medium term uptrend. In fact, actually, it's a long-term uptrend because it's been 12 months or more. So I do like it. I think on weekly chart, the key level here is the most recent high, which was in March 2025. The levels need to be broken and go above. And if you do that, then I actually see all the upside all the way up from, towards that $1.35 level, if not actually an all-time high as well. What we can do here is we can do the uptrend line as well, just to make sure it can provide a bit of a bit of a support if the price was actually to come back and test that $1 level mark.
Janine?
It's gone through the dollar level.
Yep.
It's an interesting one.
Your tick?
Tick. Looking at this line across here, I actually think that the strongest level's actually at $1. I mean, it's really been strong for it across here. So that's so interesting to see this stock break through it a number of times, but look how many times it's hit it and finally broken through, come back, and yet it still wants to go higher. It's come back to it again. I just think that if it goes back above this high, around that $1.10 mark, like Zoran's saying, it's going to take off from here. But the other thing that's interesting to me is that it's also hit a really important level. There's two lows here.
Yeah.
It's hit a really important level. Historically, our students will know what we're talking about. So that is huge in itself. And that means that potentially this stock has a higher probability of taking out that high. Now, whether it gets going and then there's a takeover offer, sometimes these sort of companies can fall for under takeovers. You know, it's just, we just wait and see. We just enjoy watching the stocks unfold and then seeing what's actually going to drive it.
Yeah, at the end of the day, you put your hat in the race and you protect your risk, and that's how it
all you can do.
How it goes. But let's now pick one stock each. What's going to be beating Bitcoin by the end of this year? If you had to pick one only,
Wow.
Zoran?
What a question, Janine. I'll let you go first.
Look, I think for me it was Z1P or the first one that we talked about. So that's Z1P that Zoran talked about before, or it was RZI, this little one that I thought looked interesting, which is a crypto-related stock.
Yep, fantastic. Zoran?
I'll stick with Zip. Yeah.
All right, cool.
I think it's got a lot more upside.
There you have
it. Just
it.
needs to find the bottom.
Yep. Zip to beat Bitcoin. Watch this space. All right, now if you want the skills to analyse stocks, just like you've seen tonight, visit our website, wealthwithin.com.au. Moving on shortly, we have an amazing hot stock tip this week coming from Zoran. But first, let's answer your questions. Ramesh writes, I'm currently in SPK. I bought it at $2.16 on the 24th of June with a 15% stop loss. What do you think of the stock moving forward? All right, Janine, SPK.
Yeah, this is an interesting one, isn't it? From a big picture pattern point of view, where is it? You know, that's the conundrum right now, because
looking very ugly.
It was looking ugly because it was looking fantastic when it was trending up, beautiful trend. But then, you know, this is where trend lines and having good rules are just so important. I mean, imagine people who were sitting on this stock and at the point where they could have sold it with good rules, and then only to watch it fall 57% from there. That's just a disaster, you know. And that money could have been used to put towards their course. And all they would have had to do is buy the book. And this is what some people do. They buy the book, see how the trend lines work. It saves them or makes them money. They use that money to go and pay for the course.
Yeah. Now, when you look at that entry there, would either of you be getting in where's he's gotten in?
Look, I'm just having a look and winding it up. Okay, let's just be kind for one moment.
Well, let's be honest.
Because I can see that there is an entry. There is an actual entry there, but I think it's very ballsy, if I can say that, to take this trade. Was risk considered as a priority? That's the thing that I'd be asking. And, you know, there's a line down there. Obviously, you can get the angle of the trends sort of down there.
Get lines anywhere, though.
Whether you can fit it there. I would say it would depend on a couple of things. One, did he backtest it and find a strategy? And Ramesh has been on the show before, so he may very well have done that.
Yep.
Was it a high probability that the rules were going to actually be successful, and what was the profit like on doing that?
Okay.
To justify that risk, you know. I mean, so I'm sure he's got a decent stop loss in there. He knows
15%, yep.
15%. Well, but then again, you know, is that relevant as well? You know, would you set a 15% stop loss on a trade like that?
Yeah, that is the very important question. And Zoran, I think we'll get you to answer that one, mate.
Yeah. I'm having a look at the stock on monthly chart because I can see that it's not very uncommon for this stock to actually fall so aggressively. And we've actually seen that back in 2021. We've actually seen that in 2026. And then we've seen it in 2028 during the GFC as well.
26.
We're
going
2006, my apologies.
We're going into the future right now.
It's been a long day.
It's foretelling the future.
Has been a long day. And Janine, you're putting me on the hot seat. But what I can say is the positive is that the stock has actually all these times reversed, found the bottom, and started a long-term uptrend. Okay, so that's the positive thing. In terms of entering the stock, I'll be straight out, and I think this is a punt and a gamble in my books, and I don't like to do that. So I'll be straight out. I think, I'm not quite sure if this stock has actually found the bottom, because what you'll find is when stocks fall this much in price, sometimes they can have a dead cat bounce and actually come back up, but then the remaining trend or prevailing trend will continue to head lower.
Oh, yeah.
Now, again, if this is the bottom and he's actually picked it, then you could have a significant upside on the stock. But if I was you, what I would do is ensure that my rules are quite tight, and as the stock continues to head higher, to protect my initial capital as much as possible. Because when you're seeing the stock fall for such a long period of time and so aggressively, then I would generally say there's something fundamentally that's driving it as well.
Yeah, you'll see footprints in
Correct.
price if really it's starting to get looked at or picked up.
And this is where the back testing is so important, because even if you've had this level of volatility on a stock, the back testing can, if you know how to do it properly, can be really important in choosing the right approach.
But let's just give him his props. You do have a stop loss, so if you've got the protection in place. So well done. Thank you for your email. Now next up is Razia, who writes, can you please take a look at BOE? I am new to trading and I bought Boss Energy when I saw it on one of your recent shows. Are we looking at a medium-term opportunity for this stock? All right, now it's interesting, buying a stock on watching the shows. It's, maybe speak a little bit to that, because when we talk about stocks on these shows, what we're providing, it's not a tip sheet.
It's information.
Yeah, and, when you're looking at a stock like BOE, there are so many factors and layers.
You still need to do your own work and justify the risk that you're taking and have really good rules and understand why you're buying it. Don't take tips. I mean, we pick the really good stocks to look at, but you've got to decide on the right time for you.
Because at the end of the day, it's not about buying. Buying, okay, yep. I mean, we've had so many people looking at this show and getting in and, we get emails, oh, we made this much, whatever. It's not the point. But the point is, when you get into a stock, you need the confidence to know before you get in when to sell, because that's when you make the money. And that's why, I'd say, for me, if you're asking those questions initially, you've bought it and now you're asking, what do I do? You probably shouldn't have been in it in the first place. You probably need to get educated first and then start to get involved in the stock market, so you're not asking these questions. You should know before you get in, I'm going to sell here and that's it. Not, hey, what do I do now? Yep. Anyway, to answer the question, what does he do now?
Exactly, now that we've got through that lovely pep talk.
Yeah.
So now what we're seeing is this strong rise that's happened, which that was a really good sign. The fact that it moved up the way that it did is a big tick to the upside initially, but right now it's taken out that May 2025 low. So in the short term, there is a threat or a short-term risk to the downside, but look, bigger picture, I still am bullish on this stock. I think it's just a question of how far will it swing down before it goes back up.
Yeah, and watch the uranium's price as well, because uranium fell over the last week and a half, and this fell along with it. So maybe
a stop loss is the most important thing, obviously.
There's a lot that needs to go in, but yes, make a line in the sand. I think that's what you need to do. Anyway, Nadira now writes, I've been watching IGO and am thinking of getting in. It has found support at major resistance and it has broken a downtrend on the monthly chart. I like the fundamentals also, but the PE is a little high. Should I get in now or wait until it comes back to $4.50? I'm thinking short to medium term play. All right, so all of the, I guess,
all of the
ticks are done.
Yeah, I really like the student actually provided the email and collaborated and explained everything. I think obviously there's some knowledge in the email if I can read it correctly. On monthly chart, obviously it was looking atrocious, from the highs back in 2022. Obviously long-term downtrend. However, in saying that, as majority of things do turn around in life, hopefully this stock will too. So what I'm finding is that $2 level is providing a good support on monthly chart, and I think on monthly chart as well, we actually that $3.20 as well, it could provide actually a kind of what we like to call major support or double bottom as well. I'm not so confident with the fact that obviously this major low is actually lower and broken through below this low. But again, I'll give a benefit of the doubt. On weekly chart, I think it's looking much better. I like that obviously we found that low at around $3.10. The stock is actually somewhat retraced and moved sideways. It's consolidated and broken through this most recent high as well. It's gaining momentum, which is really, really positive. And if we can take out the actual high of $5.52, then I think we've got room to run around these levels, which is actually $7.50. So look, you know, falling knife, long-term stock that's been actually going downwards, sometimes it can be a little bit challenging and hard, but you know, at some point, obviously, we got to find the bottom and turn around, and this could be the time that he actually does so.
All right, very good. Next, we have Shannon, who writes, I bought LYC at around $7.51 on the 9th of April, and now with the news event today, the profit has landed its value to 33.16 in front. Should I take the profits and then wait for another entry given its reasonable return already? I'd much prefer to keep the returns and then look for another opportunity later on. I don't think it's wise to add more to the position and just take my profits. All right, Janine, another...
No, can I jump in?
All right.
Go for it.
I'll jump in. Like, I'll let you analyze the stock, but I'll just provide my 2 cents on this, because what we discussed in the show previously was actually exactly what you said. Having a plan to buy and sell at a particular price. And what I'm finding right here, you know, good on the student or the client or the trader actually finding that 33% upside. That's phenomenal. That's fantastic. But what I'm finding throughout the email, that he's probably got an entry level, which is where he came in, but he hasn't got a strategy where to exit. And I think that's the most challenging component. And I actually see this every day on the desk, you know, through the broker that I trade as well. And also another aspect that what he mentioned now is he's looking to take profit off the table as opposed to potentially topping up onto the position as well, which is what I'm seeing all the time as well. I'm seeing, and it's not this case, but what I'm seeing is traders let their losses run. Yeah. All the time, and they take actually small profits, cut their profits short. So if I can give you one word of advice or general advice, it's always to think about the bigger picture and see how you can actually maximize the profit. And because you're actually in such a good profit right now, maybe it's about protecting your position and try to remove the emotion out of it. Because if I have a look at the monthly and weekly chart, this stock looks really, really good in my eyes. Yeah,
you're saying that the old cliche, let your profits run and cut your losses short, not the other way around, which is what it looks like this could be. But
even though he's done exceptionally well, I mean, he's actually got 33% profit on his position, which is fantastic.
Well is when you sell to me.
Yes,
well is
that's true. It's unrealized. So
right now it's in the air. Well is when you get the job done. So on that, Janine, I'm being a bit hard today. Maybe it's just...
So you're saying well is when you sell. You're saying that he should be getting close to that point now.
Look, I mean, it all depends on his. Again, it goes back to the start. Why did you get in? Is it a short-term play? Is it a medium-term play? Is it a long-term play? What makes you so sure that right now it's time to sell? Just aside from that, you're up. If it's only because you're up that you're thinking about selling, that's wrong. There needs to be a reason why you should be selling.
I agree.
Because you're now trading in the fear and greed side of aspect.
Yeah, because normally we're selling when it starts to come back.
There's a reason.
But this is not coming back.
To the way that most people think.
Or there's an exit present, or that you've hit a level that you know, through knowledge that, hey, this is it for this stock. It's at where it needs to be. I'm ready to take the position.
Well, can we talk about that then? Because it's getting closer to that really strong level of resistance.
Yes.
Yeah. So
what he should be looking for is something that happens around that level.
Well, that's really a good observation. And my point to this is, what about if this stock actually does another 15% or 16%? It breaks through a major high or major peak, which was actually created back in, when was it? Let me just have a look. In 2022 in April. What about if it actually goes through that? Because I really don't see any major resistance level up until $18 to $20, if not an all-time high. So my question is, if this stock was actually to continue head higher, and if I think Shannon, right?
Yeah.
If he was actually to sell at this point, and the stock actually continues to go up, his psychology is obviously going to completely change because he's going to have a massive FOMO.
Now he's gonna
I assume now he's got to chase. So he's got to re-enter. And then if the stock potentially comes back and takes a breather, and you actually it's all of a sudden in a loss, as opposed to continue to ride your profits, how do you manage that state of mind?
No, that's a really good point. I mean, the state of mind when the stock falls 17% in a couple of weeks, because that's what the sort of volatility is, isn't it?
Yeah.
Yeah, that's what you're talking about. So his state of mind is one of the key areas here for looking at. Is it a he or she actually? I shouldn't be rude, but
they can wreck their psychology just by, like Zoran said, you go back to 2010. You look at 2010, it's pulled back, it's up 30 or 40%. And then from that point, it goes and runs a couple of 100%. So that's where the real damage to the psychology can happen.
Absolutely.
Just because you're thinking, I'm up.
Yeah, but the challenge is if it's short-term focus, and the challenge is if they've set the rules based on the short term and then it ends up doing the 100 or 200% or whatever, then you're going to be looking at it that way, aren't you?
If it's prepared on the onset that you're looking for a short-term trade and 100% is what you want, you take it, you forget it, you walk away. If it's not, then I think, I don't know if you're a student or not, but I think you're a perfect candidate to...
Yeah, I'll just add something very quickly, and I know we got to wrap it up, but I like this. I love seeing this when clients are doing quite well and they're making money and things are, going well for them. But it's not too late to set some rules in because you have the buffer of 33% upside on your position. So if I was you, I would actually make sure that I have solid rules in play at the moment and essentially protect any downside. And the other thing is as well, taking some profit off the table will never get you broken. And it could actually provide you a sense of confidence that you actually lock something in.
Yeah.
And then basically make a next decision.
Yep, that's great.
All right. I think you've got some great advice there, Shannon. Now time for our hot stock tip for the week. Now, Zoran, this one's an interesting one today.
It is. News came out. It's St. Barbara. SBM is the code. Quarterly results, actually preliminary results came out. My apologies. Gold sales for Q4 June financial year 2025 totaled around 34% to the upside, which is actually quite significant. Gold production is also gone up as well. So, St. Barbara has actually done quite well in all segments. It looks like no debt at the moment as well. And assets are around 168 million at the moment. So the stock has actually got a quite healthy balance sheet as well. And fundamentally, it's actually looking very sound. Technically, if we have a look at the stock as well, I actually really like it. I really do. We spoke before the show, Phil. I think, and what I keep ramping on for the past few times that I've been on the show, I love these cycles or Dow phases of the market when the stocks actually do a full cycle from the bottom up and on a few occasions. Now, whilst this stock hasn't actually quite hit some of these all-time lows back in 2014, it has actually pinned the major low back in 2024. It looks like it's actually found some major support level around what levels is this? Around 15 cents. And it's actually trying to find some fee. On weekly chart, it's looking much better. Whilst it's not a buy for me at the moment, and I would like the price to actually maybe hit the highs of 40 cents or 36.5 cents. I still think there is actually some room for improvement. But on the downside, as a traders, and we always have to look at this, I would not like the stock to actually hit anywhere below these levels, which is, just a moment, the mouse is playing with me. But I would like this, I would like to probably not see anything below the 20 cent level mark. I think as a trader, if it does come back below that, then we would be probably looking at the major low that was created in March 2024. Otherwise, the break above 37 cents would probably provide a good entry buy signal on this stock as well. And if it's supported by the fundamentals, it's really good as well. Gold prices are continuing to outperform the market. There's a lot of geopolitical risk at the moment. Central banks are loading as well. So it could be one to watch, definitely. What do you think, Janine?
Yeah, I think it does look interesting. Obviously, it's a small, it's a penny stock.
Yeah.
It's small, but like you say, once it gets through this high here, it could be quite a significant run.
Yeah.
All
Phil?
right. Thank you very much. Now, if you want more hot stocks from us, check out our video, ASX Stocks to Bounce on Tariff Extension. Get in now.